So if you're taking your paycheck and your savings every single month and you're saving them in currency, you're probably going to see your life savings dwindle away. So I think we're living in a very uncertain world right now, and there's a lot of political uncertainty with regard to politics, trade policy, labor policy, manufacturing policy. So if you're considering investing in a company, the question you have to struggle with is, will the company be impacted by tariffs or trade policy or tax policy or labor policy or manufacturing policy or a war or a famine? And so that's the first uncertainty. The second uncertainty we have today is monetary uncertainty. We see a lot of countries with their currencies collapsing. And so if you're holding a currency or you're holding a company or a bond that generates cash flows in anything other than the dollar, you have a massive amount of uncertainty and risk. If we look at the last 12 months, the euro has weakened against the dollar, the pound has weakened against the dollar, the yen has weakened against the dollar, the Turkish lira has weakened against the dollar. In fact, just about every currency in the world is collapsing against the dollar, anywhere from 10 to 20 to 30%. And in Turkey, it's about 90% in 12 months. So there's a lot of monetary uncertainty to go along with that political and that commercial uncertainty. We call the two things together stagflation. You've got a stagnating economy. You've got an inflating money supply, which means that your currencies are buying less. So if you're any individual and you're looking out over the course of a decade and you have any capital that you wish to preserve, or you're generating cash flow from your job, the question is, what do you do to insulate yourself from stagflation? And if you rifle through the list of options, you can invest in companies, but which company? If you invest, there's no company in Zimbabwe that'll save you. 98% of the companies are actually not monopolies, which means that they're getting eaten by Google, Apple, Amazon, Facebook. So if you're buying a non-monopoly company, it's risky for all sorts of reasons. If the company has employees, it's risky because of employment taxes and labor policy and unionization. If the company manufactures things and moves them cross borders, it's risky because you end up with tariff barriers. It may be, if you manufactured great stuff in China, you can't bring it to the US. Maybe it gets banned. So if you're trying to save your capital by investing in companies, you take on all sorts of corporate risk. If you're trying to preserve your capital by buying bonds are currency derivatives. They're value based on cash flows. So if the dollar supply increases by 15% a year, you have to discount the bond cash flows by 15% a year. That means that every 5 years or so, they're worth half as much. If you're holding the cash itself, that's obviously a currency derivative. It's collapsing in value. Person's got to figure out how are they going to store their life savings. And if I'm not going to hold it in a currency, and even if I hold it in a currency, not only do I have the inflation risk, I have the counterparty risk. The banks will actually freeze your funds if you live outside the US. Banks are freezing people's funds everywhere in the world right now. In the US, perhaps your funds won't be frozen. You'll just have the currency collapse. Commodities are increasing in price right now. Oil, wheat, soybeans, natural gas. All of those have surged in the past 12 months. You'd like to hold a commodity that you can hold forever, that it has a supply that is inelastic to the demand. It's kind of hard to dollar cost average into a skyscraper, right? The average person can't buy $387 a month worth of a skyscraper. So it doesn't quite work. You can't buy $200 a month worth of the New England Patriots either. So certain things that look like long-term trophy assets don't work for the average person. You can't stockpile oil for a decade either. I know, I thought about it, when oil got to $0 a barrel, there was a point when it was free. So why wouldn't you just go and get $1 billion worth of free oil, right? 1 billion barrels of it, because you would have made a fortune if you could have, but the average person can't stockpile oil. You couldn't take delivery of. So at the end of the day, the issue is most things you can buy are currency derivatives, and currency derivatives are correlated to the strength of the currency. All currencies are collapsing. International currencies much faster than the United States dollar, but the United States dollar is also collapsing. You need to be able to afford to hold it for a decade, maybe hold it for 20, 30, 40 years. And I want something that's globally desirable, ideal, and the ideal property is something that a person more affluent than me, more intelligent than me, will want from me in a decade. So the case for Bitcoin is it's scarce, desirable property. It's not a currency derivative. It's not a security. It's beyond the reach of a company, a nation state, an agency. You can hold it and you can give it to your children or your children's children. You can take custody of it and you don't have to trust a counterparty. And I think we can see, especially this month, the risk of counterparties is great. If you hold gold in a vault and you're Russia, your gold can be seized. If you have cash in a bank account in Argentina this week, your cash is locked up. If you had Bitcoin with a counterparty like Voyager or Celsius, they might very well block you from withdrawing it. So Bitcoin is desirable because it's portable, it's global, it's scarce, and you can duck a counterparty you don't trust. You can transfer it to a different counterparty, or you can take personal custody. And that's why it's a useful asset right now. You know, we got a phrase, not your keys, not your coin, in the Bitcoin world. But, you know, if you own a building in Moscow, maybe you don't own the building. You know, if the mayor of Moscow turns against you. And if you have a yacht in the south of France and you're Russian, maybe you don't own the yacht. And, you know, if you have granaries in the Ukraine and a war breaks out, maybe you don't own a farm. And so most things, they live in a political domain or in a physical domain where your ownership rights are questionable. And you have to at least discount them with some risk, depending upon your citizenship and your own location, and then the type of entity you are. I think Bitcoin, it appeals because it is the purest form of property or ownership that the human race has yet to divine. And that's why I think it's valuable in a portfolio. And so if you're taking your paycheck and your savings every single month and you're saving them in currency, you're probably going to see your life savings dwindle away. So I'm an advocate of Bitcoin primarily because people need a technology to save their life's work or to save their assets at any level, any scale.